Experts have revealed why Tesla shares are so risky, and we will discuss this more in today's video. Tesla shares have been rising against the tide of pessimism, with the belief that CEO Elon Musk can't do what he's doing. However, only about 3% of the shares are now held short. Short selling entails borrowing shares from other investors beforehand. The shares can then be sold by that party, but must be repurchased by the short seller at a later date and then returned to the original owner who lent them. This basically means that a lot of people are betting against Tesla, and for good reason too. What makes Tesla a dangerous stock? Why are people betting against an electric car brand? Keep watching to find out. Tesla CEO Elon Musk has long referred to the company as a technology company, but it is still a manufacturer. Supply chains are essential for manufacturers. Supply chains are being disrupted around the world. Epidemics and war are fundamentally destructive events. Both are harmful to economies and other organisms in general. But some say Tesla is teetering on the brink of collapse. It's true that expansion, especially in this type of business, is a challenge. After the initial scale, it doesn't get much simpler, at least for cars. Additionally, Tesla has been pursued by the electric car group for years, and they are getting close. Rivian and Lucid Group offer electric cars similar to Tesla's. Ford Motor Company has followed suit. Volkswagen is also increasing production. Chinese companies are now strong enough to survive with less government aid. Experts say Tesla needs to grow faster than GM or Ford in the next few years to justify its current valuation. It will benefit from the opening of its factories in Berlin and Austin. However, with the amount of time and work it takes to ramp up production, it's a bit hard to believe that last year's 83% increase in vehicle deliveries can be repeated. The premise of most positive forecasts is that Tesla, like Apple, will maximize the value of every Tesla sale through its software, electricity, insurance, and services. However, cars still account for about 90% of Tesla's income. Tesla is not a solar panel manufacturer either. In 2021, revenue from battery storage declined 38%. This does not mean that Tesla has not been successful. Yes, she has. On the other hand, its stock price assumes that it will be able to continue its current growth rate, even if electric vehicle production accelerates elsewhere. We saw this last year with cloud stocks. People's willingness to pay for growth has limits. Tesla seems to have broken this barrier with lightning speed. This doesn't mean Tesla is a terrible company. We think it can easily increase its bottom line by 50% this year while still turning a profit. However, after that, growth may be slow. As a result, large numbers are difficult to change. The income diversification that Tesla promised has yet to materialize. Even if you estimate that Tesla stock is worth 10 times current revenues, or that its earnings could quadruple and be worth 30 times, you are still looking at a significant drop in the stock price. Full.com contributor Connor Allen examined what really drives the electric car company's high value, and his views are a bit skeptical, but well-founded in line with our previous interpretations. According to Connor, Netflix is an excellent analogy when comparing the two. If Netflix sticks to streaming, its stock will likely continue to decline. They'll have to come up with something else. However, if you look at Tesla as a car company, it is the most overvalued car company in the history of the world. What is the potential of everything else they do at the price? Some argue that Tesla is cheap because of all this potential. For the most part, Connor says he'll believe it when he sees it, and he's absolutely right. Most of the stock's positive outlook for a company is based on future events and things that are to come. Just think about all the new technology Elon Musk is talking about. Elon and Tesla are quite prone to big exaggerations, and that's something that's consistent with the brand. An example of this is FSD and Cybertruck. However, if you are a regular follower of this channel, you will know that we have a more optimistic outlook. So, although Tesla stock is already a risky bet, we think it will have big rewards. Tesla stock has had incredible success over the past 2 years, with revenues of $53.8 billion and a market valuation of $900 billion at the time of filming. Video experts often consider Tesla to be an expensive stock. However, as gas costs continue to rise, We believe public opinion will undergo a paradigm shift as Russia produces most of the crude oil, the main ingredient in gasoline, throughout the war. Gas prices are likely to remain high for much longer than previously expected. Tesla cars, of course, are expensive. On the other hand, gas prices compound over time for individuals living in rural areas in the United States, where cars are almost a necessity and gas prices have been a greater burden. Without lower gas prices, consumers may find Tesla vehicles more cost-effective. At the long term, from a conventional standpoint, Tesla is still overvalued. However, a stock is about more than just its earnings and market value. Although Tesla has been fundamentally overvalued for nearly a decade, it has continued to rise. In short, traditional measurements appear to be ineffective for Tesla. Moreover, Tesla's revenue growth has been excellent, and the company is slowly but surely closing the gap between market cap and revenue. Do we think Tesla is a dangerous stock? Very much so. It is still important to realize that the market is very volatile. If the current global scenario leads to a recession, Tesla will certainly decline along with the rest of the market. Gas prices could fall due to a recession, as happened in 2008 due to market uncertainty. Tesla stock is a risky short-term investment. However, even in the event of a recession, we remain optimistic that Tesla will rebound in the long term. If a recession doesn't happen in the near future, rising gas prices and rising sales will certainly cause the stock to reverse. Tesla has expanded rapidly, and in a world where governments are moving toward renewable energy, it is not unreasonable to expect Tesla's value to rise. In March, the company began manufacturing and delivery from its combined facility, and in April, it began production and delivery from its factory in Texas. The two new facilities will relieve pressure on Tesla's Shanghai facility, allowing the company to better manage supply chain issues as well as worldwide semiconductor and battery material shortages compared to its competitors. Tesla announced in a recent investor presentation that it has begun deliveries of the Model Y crossover SUV from its factories in Texas and Germany, while also trying to bring battery cell manufacturing in-house and diversify its supply chain and purchasing processes. As a result, the production technology of the new Giga Texas, the Model Y chassis, was simplified. Tesla deleted more than 1,600 welds and significantly increased the Model Y chassis compared to the existing Model Y. Tesla explained the improvements during its earnings call. They also stated that compared to Shanghai, they should be able to ramp up manufacturing in Texas and Berlin faster because they have learned a lot. Tesla was one of the first companies to take electric cars seriously. So far, Tesla mainly dominates the electric vehicle segment with relatively little change from its main competitors. Tesla also offers some of the most advanced self-driving technology and one of the lowest maintenance costs of any car. Contrary to what skeptics might think it effectively does for electric cars, Apple does for phones that charge a premium for ease of use. In the long term, Tesla's competitors are sure to catch up. However, due to its popularity, Tesla will continue to account for a significant portion of electric vehicle sales. It's also worth noting that Tesla is not just an electric car manufacturer. It produces a variety of income-generating energy products, such as solar roofs and storage or charging systems. They will certainly benefit from the world's shift to renewable energy sources. We feel the stock has the potential to make a lot of money over the long term. Making large trades in the current unstable market is still very risky and should be avoided in the short term as a result. We believe that anyone looking to buy Tesla stock should not do so with large sums of money. In conclusion, we feel that Tesla will be there for a long time, but there is a possibility that the company will not meet our expectations. But as they say, the greater the risk, the greater the reward. Are you betting for or against Tesla? Comment below.